Hello, hello. Welcome to May 27th. Alpha's IAU of 48%. Let's go look at the chart. There it is, 48% for IAU. We did have a dip here. We had a low here of right your eye. You can see right there the word low. Let's bring that over closer here. So the low here was 3602. That was yesterday. Today we are at 3596. And if we get a higher low on the right tomorrow, that will become our new dipper low to get us out, to looking toward getting out to this trade. We are at 48%, but the P&L is reporting back that we are at 100%, $100. Remember, this is not a loss leader trade. This trade came off our scanner for an in-class demonstration back in March. So whatever we get out of this trade is going to be pure profit and gets returned to the winner's circle right off the bat. Our target was 2% of capital at the time, and that was $122. So it would be nice to hit the target. But ultimately, the bottom line is that this is not a loss leader. With that said, we don't have anything else left here to do. So let's go to the scanner and run the scanner. And ran the scanner for the uptrend, and we'll run it one more time for demonstration purposes. And nothing there. And then we ran the scanner for the downtrend. Now remember, this scanner here is a little bit much more in depth than the previous scanners for the STO, and we came up with Visa. Let's run it one more time to make sure that it was Visa, and sure enough, there's Visa. So now we're going to set up a complete Visa trade. So the first thing is we have to get to the Visa chart, and at the Visa chart, we're going to set up our entry. And you can see I pre-prepped this to save some time. So our entry is the low of the candle, which is at 226.37. So I'm going to make the entry at 226.35. So I click this here and I go here and I go 226.35, and hit that's my 3-to-1 ratio line right there. And my stop is going to be here based off of this price channel, the inner price channel. So this is the inside price channel, or called the immediate, intermediate, and long. So at the intermediate, immediate, we are here, and with based off this high, so we can go to 230.19. So we're going to make the stop 230.20. So we'll come back over here, and now we're going to change this to 230.20. And now we have our 3-to-1 ratio. Excuse me. The thing is that if the order triggers, we'll be going right here, and that's our target, 214.28. Remember that we are going into the Elvis shift starting next June, on June 1st. This is still within that wheelhouse. The important part here was that the scanner found our position from the weekly scanner, which is the weekly scanner is going to be stopped. Being the last time that weekly scanner will be used will be on Monday, and then from Tuesday we'll be going into the trend SOT scanner. So now that we have our entry, our exit, we're going to put our first exit is going to be here at 237.77. Reason why is because this here is called the initial stop, and that is because day pattern trader. Trader rules. Okay, that's what that's about. And we'll just round it off. Not going to be important after tomorrow. Oopsie. Okay, day pattern trade. Let me see. Okay, day pattern trade. So that becomes our initial stop for accounts under 25,000. Extremely important to remember that if you are under 25,000, you've got to watch out for your pattern day trader rules. Okay, so now that we have our entry, we've figured out our entry is going to be 226.35. So I'm going to have to drop that down. So let me go grab my scratch paper. And this is what you get for not being prepared. I was not really, I was so disappointed in the last few days of no scans, and now all of a sudden I got stuff. So now I have to go to work. So our entry price is 226.35. Our target price is 214.8. That's what you see here. That's a 3-to-1 ratio. We're still using the 3-to-1 ratio. And our exit is our official exit. Our official exit for the stop is at 230.20, and the initial stop to avoid day pattern rules is 237.75. I mean, the likelihood that this is going to trigger here and then travel all the way back up here and take us out is unlikely. It could happen, but it's unlikely. So now we have our parameters of our entry. Okay, so coming over here, we're now going to bring up our we have to go to the now we have to go to the options chain. Welcome to the options chain. Now, when I first saw the options chain many years ago, it just well me. I mean, all these numbers and what they meant, and I was like, I'll never understand it. But it turns out to be a lot simpler than that. Number one, you're going to be looking for open interest more than 4,000. Number two, the AB spread, either the calls on the left and the puts on the right, cannot be wider than 10%. If it's more than 10% AB, pass the trade. Doesn't matter how much open interest you have. It doesn't matter what the delta is. Bottom line is that if the AB is too wide, don't touch the trade, because you're automatically putting yourself into indebtedness. So here is our we're eyeing here. Why? Because here you figure 10% of capital is the allocation. 10% allocation, and therefore 1% of the capital is the cost of the option. 6.60. We got 665. So we are going to fidge a little bit on this. This you can fidge here just a tiny bit. As long as the AB is within its range, you can fidge on the 10% allocation. So here we are. So that is going to be our option, and it's going to be only one option. Because why? Because we're only allocating 10% one contract. So now we can come over here, and you can see now I have these evaluators. To get to the evaluators, I got to come down here. Oh, and there it is, right? We're looking at 12.1 for the SPY for the day. So on my evaluators, I go to a thing called Traders Pro. And Traders Pro, we're going to type in Visa. And Visa comes up with a hold down up. But you can see the yellow, that means it's uptrending. The price is trending up. The other spot I go to is Trading View. In Trading View, we got Visa again, and click Visa. And in Visa, I go to what they call the technicals. Oh, I made a mistake here. When you go to Trading View, you have to be careful if you want to get the overall picture like I did there, and then put in your ticker symbol, then select your ticker symbol, and now you get the overall. Then I go to technicals, and in technicals, I go to monthly. What is going to be 30 days out? And in 30 days out, we have 2 buys against 1 sell, which means that makes it in the makes it sell, makes it a buy. Okay, so and then the other thing that we need to get is implied volatility. That we can get by here. We can look here and say, okay, the delta. Oh no, it's not here. Where is implied volatility? Oh, it's somewhere else. Okay. We have an implied volatility, but the thing is, I saw it the other day. The implied volatility is when many traders use the implied volatility, and many traders don't. So I'm going to, for the lack of time. Oh, we're out. We are out of time. Oh, that's a shame. We can't get to the setting up the order. You know what? Come back for part 2. Yeah, we'll do a part 2 today. Okay. And with that, we'll stop recording and go to part 2.